Hello and welcome to Banking Services, which is a part of the Money Smart series. We're going to talk about what banking services are, what the impact of credit is, and that's both personal and business, and how to build a strong banking relationship. How do you find a bank or a credit union or a funder of a different type? So welcome everyone. This is where you can get your participant guide. Hopefully you already have one. And as you're going through these classes, there are 13 classes in this Money Smart series. All of the participant guides are at this location. So we're going to look at, in your guide, there's what they call a pre-survey and a post-survey. Basically, it's just some questions that it's asking to find out what do you know already and what is it that you know more about after we finish with the class. So I'm going to recommend that you guys take a look at this. Do the first one. Take the pause this class and answer the questions. And then go back and do the same thing at the end to see, have your perceptions changed? Did you get more knowledge, etc. So the agenda today is that this is basically broken into 3 sections. The first one is going to be on banking services because we're going to learn about what is a bank, what does a bank do, and how do we use their services to our advantage. The second section is on financing and options and different sources for financing. So that's something that's extremely important because one size truly does not fit all. And then the third section is about avoiding fraud and scams. So let me just say that in our virtual classroom, we have quite a bit of information on the financing, the options, and the sources. So there are other classes that may go into more depth than this class does. And we also are starting a 10-part program on cybersecurity. And that's going to go into our virtual classroom also. So those classes right now are going to be live and then they're going to be recorded so they can go into the classroom. So why are we doing this? What is it that we want to learn? Well, one of the things we want to learn is we want to learn about what banks are, what they do, who we need to talk to at the bank. Or should we be talking to a credit union or should we be talking to an alternative funder? We want to know how to build that relationship because we want to build the relationship before we actually ask for the money, before we need the money. We want to look at the advantages and disadvantages, the risks that are associated with working with somebody else's money. And we want to look at the types of lending options or funding options that there are out there so that we know we're making the best decision for ourselves. We want to think about, as we're looking at these options, what kind of research do we need to do so that when we sit down and talk to a funder, we are able to answer their questions because they will be asking questions. We want to look at how to go in showing our best side, what we want them to do is to say yes to us if we're asking for their money. And we want to make sure that as we go through this and we're talking about banking and all of that other stuff, that we can recognize when somebody is trying to scam us or hack us or whatever. And then what are the things that we need to do? And then some things we can handle ourselves, some things that we can't. And when we can't handle them, when do we call the pros in? Okay, so this is going to be a pretty full program here. All right, so that first thing that I told you about the pre-survey is really to look at what you know and what you don't know, and what do you want to learn. Okay, when you do that form, it's to help you decide where you need to put your focus, where you need to put your emphasis as you go through this process. So let's look at some banking services. Okay. How do we build a banking relationship? Well, first of all, what is a banking relationship? What are the factors that we look at in selecting a bank or a credit union or an alternative funder? What kinds of services do these places offer? And I'm going to use bank as something that's all encompassing for all of those kinds of things, whether it's a credit union or whether it's an alternative funder. So what kind of services do they offer? Do they offer checking? Do they offer debit cards? Do they offer savings? Do they have other kinds of accounts like CDs, certificates of deposit? And can they offer us things that will help us grow our business? Maybe we don't know how to do them completely, and the bank says, we can do that for you, like a payroll service. I may have some employees, but I don't really know all the intricacies that it takes in getting payroll out to my employee and get it done correctly and get the money, the taxes taken out correctly and sent where it needs to go. And also merchant services. What if I'm asking my customers as a courtesy on my part, I'm saying to them, you don't have to pay me in cash. You can also pay me with a credit card. You can pay me with a debit card. If I'm accepting those kinds of things, if I'm accepting electronic payments, then I need to have a service that will do that for me. And that is called a merchant service. In both cases, in payroll services and in merchant services, there are individual companies that do those things, and that there are banks that offer those things as part of what you do with them. Please understand, these are things you pay for. You pay for the payroll services and you pay for the merchant services. So looking at building that banking relationship, sometimes we are a little intimidated by the banker. I know I was when I first moved here years ago. I went into several banks. I had my business for a while. I had my business in Los Angeles, and then I had my business while I was in Hawaii. And then when I came here, I still had my business, and so I went into the bank. And I went to several banks, in fact, and told them that this is who I am, this is what I do, this is how long I've been in business. And I was turned down by every bank I went to. I was turned down because I had not lived in Las Vegas for 2 years. And that was, at that time, that was their minimum to say, I'll give you a business account. And so that became a little intimidating for me. And then I met a friend who says, oh, I've got a friend who is a bank manager. I'm going to send you directly to her. She'll set you up. So I went directly to this lady who was the bank manager at B of A, and she set me up, and I'm still there. Okay. But it was intimidating walking into other banks, and I know how to run my business. Well, at least I thought I did. And I've been in business for a while. And I'm walking in and saying, I'm trying to make sure that the funds that I get are coming through a Nevada bank versus coming through a Hawaii bank or a California bank. And it was fascinating to me that when they said no, that was a long-winded way of saying, don't get intimidated when people tell you no. Your next question is why? Why are you telling me no? And they need to give you an answer, because you can't get to yes if you don't know the path to yes. So have a very confident conversation when you go into a bank, but make sure that you are asking questions that help you help them say yes to you. So, have you heard the banks don't give small loans? Well, I was a small business and I did not need a $50,000 loan. In fact, I wasn't even looking for a loan. I was just looking for a place where when my clients paid me, it went through a bank. And so some people need $5,000, some people need $50,000, some people need $100,000. Where are you along that continuum? And do you need it now? As you may say, well, as I'm looking at the strategy that I'm building for my business, I don't need that money right now, but I may need that 2 years from now. Let's start building the banking relationship now so that when you get to that point 2 years from now, you say, oh, okay, I've already got the relationship with the banker. The banker knows how I do business. It knows how my money comes in and goes out. They know how I know how to manage it. It's so much easier to have that conversation. Okay, so um, the one that I did not have a perfect credit score, but truthfully, I don't know anybody who does. We live in life. We live in the world and stuff happens. So it doesn't mean that because your credit score may be lower than what the bank is looking for, that you are in a bad place. It means that you need to have that conversation to find out what do I need to do to get up to your level, because what I'm looking for is yes. I thought loan applications were just massive and they took forever. Again, as you talk to bankers, find out what their loan application process is. There are some processes that they can have an answer back to you within the same day. There are other processes that take longer. Find out from that bank what is it that they offer and how do you fit into that. What you want to be looking for, and I'm very careful using this word, what you're looking for is your comfort zone. You want to be comfortable that you and this bank or this lender can work well together. Also look at what kind of fees do they offer? What kind of restrictions do they have? Are they saying in their documentation or in their conversation with you, well, every time you write a check, we charge you X amount of money? Or are they saying to you, you can write so many checks that we don't have a problem with that. That's free. But then when you go to the next number, we start charging you a fee. It's not to say to them, their fees are wrong, their policies are wrong. It's to say to you, do you understand what their fees and policies are? And do they make sense to you? What you really want to do is to talk to more than one bank. So we're going to talk about that a little bit later and how you do that and the kinds of questions that you ask. So you want to be thinking about, what do you really need? In my case, when I first came here, I didn't need a really big bank. I didn't need Bank of America. That's a really big bank. They have a lot of different services. I just needed somebody to say yes so I could park my money in there while my clients are paying me. So what are the services that you need? And when you're out looking for a bank, you're looking for a bank that fits your needs. So let's look at what you're going to be doing this year, and let's look at what you're going to be doing 10 years from now. If I am a business and I'm building a growth strategy for myself, and I'm expanding my business. I want to grow my business into having customers that work with me from all over the country. I'm looking for different kinds of ways that they pay me. Sometimes they'll send me a check. Sometimes they'll send me direct deposit. Sometimes they'll use a credit card or a debit card. I want to have that strategy in my head so that when I sit down and talk to the banker, I can find out from them, can I grow with this bank? Do I need a big multinational bank or do I need a small community bank? Those are choices that I make based on how my business is going to be set up. So your job is two things that you need to be really, really comfortable with. One is your comfort level with the bank and how it does business with you. And the second one is what are you looking for in as a growth pattern? Because what you don't really want to do is start out at a particular bank, and then as you grow, you find that bank cannot accommodate you, and now you got to take all the stuff that you've been doing with that bank and move it to a different location. People do that, businesses do that all the time. But I want you to think about that as you're stepping out to talk to banks. What is it that you need, and what is you need now? What do you need in the future? So we're going to look at a case study called EcoGrow Solutions. And this is a company, and we get to learn as they're growing and as they're going out looking at banking services, we get to learn through them. So you have a table on page 11 in your participant manual. What you want to think about is not only what they're doing, but what you're doing. What are you thinking about for your business when you look at, as we look at EcoGrow, they're going to tell us what kinds of needs do they have. And in the process, that should be tickling your brain, telling you what kind of needs do you have? What kinds of payment solutions are you looking for? What kind of financing? What are the bank characteristics that you're looking for? Are you looking for a bank for convenience of just parking my money and moving forward? Maybe then I'm looking for an online bank. Well, if you have an online bank, are you comfortable with not talking to anybody? That you do everything through technology, everything is handled through chat. If that's a comfort level for you, that's great. If it's not a comfort level for you, that's not a bank you want to look at. Okay? So these are the kinds of things that you're thinking about, not just let me walk over to Wells Fargo, get an account, and then I'll start using that as my business bank account. No, I have no problem walking over to Wells Fargo and finding out what Wells Fargo is doing so that I know, does that fit well with what I'm looking for? So when you're looking at a bank, what you want to think about is what's important to you. What's important to you? What's important to your business? And back to that word I keep using all the time, which is your comfort level. Consider your unique needs when you're choosing a bank or when you're choosing banking services. Research. Research is a very strong and very good word. You are going to talk to more than one bank. You're not going to, well, I went to more than one bank because I got turned down by a bunch of banks before I went to one that said yes. But what you want to do is when you walk into the bank, you want to walk in having your questions ready and taking notes when they give you answers. Banks are excellent at giving you a bunch of documentation to read because they figure that you're not going to read it. I highly recommend that before you sign on the dotted line, you do read it. You find out what their fees are. You find out what their schedules are. You find out what their limitations are. And you are now comfortable with, yes, I can live within their procedures, within their policies, okay? That research is that thing that you're going to do a lot. Everything that we talk about here, we're going to be looking at who's out there, who's doing it, and how does that fit into how we do business. If I need to pick up the phone and talk to somebody at a bank, then I'm probably not going to get an online bank because there's nobody to talk to. I need to get a bank where there's actually somebody that I can have a conversation with. I actually like to walk in and talk to my banker face to face. Because sometimes in the conversation, something will come up will trigger another question or another concern or another issue that needs to be taken care of that I didn't know about before. So you're going to look at account access, you'll look at technology, you're going to look at specialized things that they have for small businesses. Okay, so you're looking at all of this so that again, that comfort level that you have with this bank says this is somebody that I'm going to spend some time with. I'm going to work with them. We're going to grow together because if I've got a good banker, I've got somebody who's actually there working with me, that helps. That's part of my support team. And they help me move forward because they know stuff about banking that I don't know. And I want to be able to ask them questions so they can answer me. So some factors that you're looking at are customer service. That's part of that comfort level that I talk about. If you're comfortable with technology only, that tells you one thing about what kind of bank you're going to go for. If you're not comfortable with technology only, but you, like me, you want to go into the bank and sit down and talk to somebody, then I'm not going to put my business account at a bank that is technology only. I am putting it at a bank where I can actually go talk to a person. What kind of access do I have to my accounts and to my money? And you notice there's an asterisk there that says more protections for consumers than businesses. I don't want that to scare you. Consumers are, in many cases, consumers have a tendency to need more protection because they don't ask a lot of the questions that I'm telling you to ask as a business person. Okay. So what you learn here about how you're going to deal with a business bank, take this with you, is how you're going to deal with your personal bank also. Okay. Technology has changed so much. Like when I first came to Nevada and I was out looking at banks, I got in my car, I drove to all these banks. I couldn't go on the internet and look at what they had to offer and compare bank one to bank two. All I could do is get in my car, walk in, ask somebody a question, and have them look me in the eye and tell me no, because that's what happened to me. That doesn't mean that that's going to happen to you, but it does mean you want to do your research first and look to see if there's anything that they have that's specific to small businesses. Do they have business accounts that are specifically for small business? And ask them, what is small business to them? Because every bank, again, banks are different and they all have their own policies and procedures. Bank A may say a small business is one that has a revenue of $100,000. Bank B may see a small business has a revenue of $500,000. Bank C may say a small business has a revenue of $1 million. What you want to know is when you say small business and they say small business, you both need to have the same understanding of the words. So one of the things that you are looking for is, I don't want anything to go wrong, but if it does, am I covered? And covered is through the FDIC, which is the Federal Deposit Insurance Corporation. And basically what that says is the bank says you can have up to X amount of dollars in the bank, and if something happens, we will cover your amount up to our limit. So standard insurance amount is $250,000 per depositor per insured bank. Now, why did they make a point of saying per depositor per insured bank? Because I may have more than one bank account and I may be using more than one bank. So I can have up to $250,000 in one bank that I use, and I can have up to $250,000 in another bank that I use. What the Credit Union Association uses is NCUA, which is National Credit Union Association. Okay, so they do the same thing for that the FDIC does for banks. NCUA does for credit unions. And again, you're asking that same question. What are the parameters? What's the limit for the amount of money that I have in here? How does this work, etc.? So you're constantly asking questions because I'm going to assume that when you walk into the bank, the banker knows more about what happens at that bank than you do. So you want to be asking questions so again that you're comfortable saying, yes, this is a bank that I want to work with. So let's look at the kinds of services that they have. So they have checking accounts, we know that. They have debit cards, they have savings accounts, they have certificates of deposit. They have retirement accounts that you can do through the bank. They have business credit cards, payroll services, cash management, merchant services, and they have a bunch of other stuff. Now they have electronic transfers that you can do. You can have wire services. You can go through Zelle. You can do different things through the banks. Okay? Because they offer all these services doesn't mean that you need all these services. And your job is to sit down and think through what is it that you actually need right now, and what do you think you're going to be needing within the next 6 to 18 months. Okay? So that you've got an idea of not only where you are at the moment, but where you are moving forward. So out of all of this stuff, there is always a cost. Okay? Now, one of my colleagues says that the big print giveth and the small print taketh away. What that means is anytime you're talking about what you want to do with the bank, they tell you in really big terms, in big letters that you can read, and you don't have to squint or you don't have to get a magnifying glass to read that. They say, this is who we are, this is what we offer, this is how we work. The small print, and if you take a look at your credit card statement, you will note, by the way, all credit cards go through banks. It doesn't matter what the name is on the credit card, it has to go through a bank. So let's look at your credit card statement, for instance. What does it say on there? In big letters that are easy to read and many times it's bolded, it tells us what for the from date and the to date that the statement covers. It tells us the amount of money that we have available. It tells us how much money we have spent. It tells us the day that this money is paid to be paid by. It tells us what the minimum payment is. And all of that is in big print. So, but what does the little print tell us? And if you've ever gotten a credit card or if you've ever gotten a loan from somewhere, you get a bunch of documentation, which most people don't read. I'm going to highly recommend that you take the time to read it. If you do not understand it, sit down with a trusted advisor and go through it because it's important to you. So what does the small print tell you? It tells you all the penalties that you will run into if you don't pay me back as we agreed. Okay? So it tells you how much the interest rate is. It tells you when the interest rate kicks in. It tells you how many payments in order, if we're talking about a loan, it tells us how many payments it takes for us to get this loan back down to zero. If we're looking at a credit card, it tells us how many days we have before the interest kicks in. Okay, so all of this stuff is important to us because we want to know how to do good business with these banks. So when we look at payment transactions, when we're actually looking at how things are paid, I've had students say to me, "Well, I don't use checks at all." And you may not, but that does not mean that the people that you sell to don't use checks. So just understand, what is the check writing process, and are there any fees or penalty that are attached to check writing? Or are you transferring funds using technology? Do you get funds through direct deposit? Does somebody pay you an invoice and they pay you with their credit card? So how are you getting money from others? And then how are you then paying people that you need to pay? You need to be very clear on that so that when you talk to the bank, you two are on the same page. So how easy is it to do this? I personally don't have a lot of time to do something complicated. So when I'm talking to my bank, I want things to be as easy as possible for me to do the things that I need to do with my bank, whether that's easy for money to come into my account or easy for me to take money out of my account, maybe transfer it to a different account or pay somebody that I owe. So I'm always looking at, how easy is this for me? Is this turning out to be something that is more complicated than I expected? And no, I do not want it to be complicated. I want it to be very easy. So I'm looking at what was the volume that I can use. There are banks who put restrictions on how many transactions you can make. You need to know what those are. What are the rules that are wrapped around doing business with the bank? Federal stuff, state stuff, local stuff. What is the contract that you have with your client on how you are working with checks? Okay, so you want to make sure that you are very clear on what you're looking for and that they are very clear in answering your questions. Banks may use information systems to evaluate applicants for checking accounts. So they may say, well, let me see if before I give you a checking account, let me look at how you use money. Just like what they would do with looking at your credit scoring. They're looking at, how do you use money and how is this helping me feel comfortable to say yes to you? Just think about it. Let's turn it around. Let's say that I'm looking for money and I go to you and you're the lender, and I'm asking you to share your money with my idea. Aren't you going to ask me questions? You don't know me. Are you going to just say, "Oh, she has the nicest smile. I will, whatever she wants, she's got"? Absolutely not. That's not good business, and it doesn't make sense. If you've got the money, you're saying, well, wait a minute, let me make sure that I feel comfortable that you're going to pay me back according to the documentation that we have, according to the agreement that we have. Okay? So let's look at what is a business debit card? What is a personal debit card? And what is a credit card? Okay? So the difference between a credit card and a debit card is that the minute that you use the debit card, it immediately pulls it out of that account. So if I go buy something for $500 and I pay for that with a debit card, that immediately is taken out of my account. Now, if it's a personal debit card, it's taken out of my checking account. If it is a business debit card, it could be taken out of my line of credit. It could be taken out of my checking account. So I can choose based on what that debit card is attached to. But what I have to remember is when I use that debit card, that money is immediately pulled out. What is that difference with a credit card? Credit card says you've got $1,000 is your limit. You can spend up to $1,000 on this credit card, and it renews itself every month based on how you paid them. So if I have a credit card and I bought something for $500, I take that $500, it goes on the credit card. And what the credit card company says is, okay, you've used up $500 of your limit. You now have $500 more that you can do if you want to buy something else. When that statement comes and I pay the credit card back, that $500, I go back up to $1,000 again. That doesn't happen with a debit card. The debit card is not going to, and a loan is not going to let me take something out, goes back up, take something out, goes back up, like a credit card does. Now, there's going to be one exception to that, and that's going to be a line of credit. We're going to talk about that in a minute. So what other kinds of accounts do they have at the bank? Well, they have savings accounts. And as a business owner, let me highly recommend that you start a business savings account. If you can, take 10% of every invoice that is paid to you and put that into your savings account. Okay, and then that way you start to build up a reserve. We all lived through COVID. Some of us lost a lot during COVID and are still recovering from that. And some people made a lot during COVID. What you want to have is a reserve that says, if something happens, I've got a cushion here that will allow me to continue my business. And for the people who lost a lot from the business standpoint, many of them did not have that kind of reserve. They were going literally paycheck to paycheck and pay as money came in, they paid money out. When money stops coming in, you have no money to pay out. So seriously, think about a savings account, and at the minimum, if you could put away 10% of that paid invoice, do that and start building that account. Don't touch it. It's there as a reserve. There's also something called certificates of deposit. Now, the thing about certificates of deposit is another way to save money in a banking system, but it also helps you do a couple of things. One is that it helps you if you're going after a loan. Like I came to you and I asked you for money, and you're looking at me saying, well, wait a minute, let me look to see what you're doing with your money. And if I feel comfortable in sharing my money with your idea, well, maybe you look to see I have some certificates of deposit and you think, oh, okay, that could be collateral, because if I, as the person who's asking for the money, have a problem and can't pay, the person who loaned me the money looks at that and says, at least I've got a cushion, because that certificate of deposit is there and I can be paid back. They also look at my business credit history. If you are new as a business owner, you don't have a business credit history. What you have is a personal credit history. There are some classes in our virtual classroom that cover personal and business credit and what it means. When you are looking at personal credit, the scoring is usually somewhere between 350 and 850. Okay, so the higher you are, if you're in the 800s, wow, that's really, somebody's looking at this going, wow, this is a person who pays bills on time and keeps utilization down. Utilization meaning they don't take all the money that they have and spend it and then come back and pay it all back. What they do is try to ration it out so that if they need it for other things, it's there. So they're looking at the credit history of what I do personally. If I'm a business and I'm looking at business credit, the credit scoring can range from 0 to 100. So if I get a score of 97 on my business credit, that's great. I can't get a score of 97 on my personal credit because it doesn't go down that far. So they look at different ways that they score, different ways that they look at the history. And what you're always looking at is, can I get back the money that I lent you? What is the product or service that lenders have? It's money. What is the price? Because if we're in business and we're selling something, we have a price that we put in front of our customers to say, you can have this product or service, but it's going to cost you this amount of money. Well, the bankers, the lenders do the same thing with us. You can have this amount of money, and this is what it's going to cost you. That's the interest rate. So when you're looking at loans or you're looking at borrowing money from someone else, you want to look at two things. You want to look at the interest rate, but you also want to look at how long this loan is out there. Your amount of money that you pay back on this loan is based not only on interest, but also on time. If you have ever bought a building or if you bought a house, you know that the normal rate for a house length of time is going to be 30 years. And so if I've got a 6% interest, I think, wow, that's really good. I got 6% interest. This is great. I can handle this. But if I'm talking about over 30 years, I have paid over 115% in interest to take care of a house that I purchased for $200,000. Okay. So I paid over $400,000 back to the lender for a house that I paid $200,000 for. Now, is that a bad thing? That's the way banking works. That's neither good nor bad. What happens is we need to understand what it means and that impact that it has on us. Same thing when you look at your credit cards. The reason that you want to pay them down as fast as possible is because the bank attaches the interest rate to your balance. And as long as you have balance, you're paying them interest. If you have no balance, there is no interest because there's nothing to attach it to. So one of the benefits that we talked about that's available through some banks are payroll services. And as I said before, payroll services also are individual companies. Well, first of all, do you have employees? If you have employees, then why would you need a payroll service? Well, can you do this on your own? And you will say, yeah, it's not a big deal. I mean, I only got three employees and I could knock this out with no problem. And that's fine. But have you made sure that you know what the rules and regulations are when it comes to federal taxes, when it comes to local taxes, when it comes to when people need to be paid, what kind of documentation that they get, how the money gets from your account to their account, to them. Okay, so with payroll services, you've got two options, as with most things in your business. You either learn it or hire it. If you feel that you can do this on your own and it's worth your time that it takes to do that, then do it. If you feel that it's going to take more time for you to do this yourself, and the alternative is to pay a payroll service to do, then pay a payroll service to do it. But it's going to have to get done. And so you've got two options. You got to figure out which option works best for you. So same thing with cash management, that you always want to be talking to the bank about how you can manage your money better. I have a friend who's a CPA, and she says her client's job is to make her look good. And we laugh at that, but the truth is that is our job, to make her look good. Now, how do we make her look good? We take care of our finances ourselves. We are organized. We go through our bank statements. We look at we do a bank reconciliation. Bank reconciliation is no more than looking at the bank statement that the bank sends us and looking more at the documentation that we have been keeping track of that says what we did during the month, and the two need to match. If they do not match, it is up to us. It's not up to the bank. It's up to us to find out what the difference is. Now, we may have to call the bank and ask questions, but it's up to us to do that. So sometimes if it's not matching, maybe there's a check outstanding that I wrote that I have in my documentation, but it hasn't cleared the bank yet. So it's not on the statement. Or maybe something showed up on the statement. I don't remember seeing this before. Why is this here? We're going to talk about frauds and scams a little bit later, but what I want you to think about from a banking standpoint, and from the fact that we live in a world now where technology is readily available to us, you should be checking your bank account at least daily. Now, oh my gosh, I have so many transactions that I've had to use, and it's going to take me forever to do this every day. No, you're not checking every single transaction that's in your bank account. What you're checking is what's happened over the last couple of days, what's still pending. Do I remember going to ABC Company and buying something for $3.75? If the answer is no, then I need to get on the phone and call the bank and find out where this came from. Because I had it happen to me, and some of you may have had it happen to you. And when I called the bank, they sent me to security, and security is the people who manage the fraud area. And I was told this is how fraudsters check to see if you're watching your accounts. Because if you're not watching your account, they'll send a test amount through. So maybe that $3.75 was a test amount. You didn't take, no, I don't know what it is. It doesn't matter. And you move on. You may come back to your bank account in a couple of days and there's nothing there because you're not checking. So don't make this cumbersome. Don't make this overwhelming. It's not that. It's just go in. I recommend daily and look at what's happening in your account. If you went to ABC Company and you bought something for $3.75 because it just happened today or yesterday. And always this is the accountant in me speaking now, always say yes when they ask you if you want your receipt. If they do not ask you, do you want your receipt? You ask them for it. Whenever you are talking to a government agency, IRS, local government, whatever it is, all they ever want is paper and copies. If you don't have the paper, you are automatically in jeopardy because you've got nothing to prove your side of it. It's important that you can say, yes, I bought this at ABC Company. Here's the receipt to back it up. Not that it's on the bank account. I'm checking my receipt against the bank to make sure that we agree, but I need to have my receipt to do that. Okay, so we're also looking at merchant services. If I'm saying to my customers as a convenience, I'll be more than happy to accept your credit card and debit cards. I need to do this through a merchant service, which can be available through a bank, or it can be an independent merchant service account. But again, you're looking at how much does it cost? Because all this stuff costs. How much does it cost for someone to do that for me? And if can I get more customers because I offer this convenience? Or am I telling my customers you can only pay me by cash and check? So those are things that you need to think about as you're looking at the bank to say, what does the bank offer? Let me find out what is it that I need. So from banking services, there are things where there's training everywhere. Obviously, there's training here at UNR Extension in our virtual classroom. We also have classes on YouTube, and SBA.gov has classes, FDIC.gov has classes, and Money Smart, this part of what we're doing right now, comes from the FDIC. And it's to walk you through and say, these are things you need to think about when you want to start building that relationship with banks. Looking at how you can download stuff, how receipts look, how accounts look, how transactions look. You're asking all these questions because I hear a lot of people say, oh, my friend George in New Jersey told me that I need to get QuickBooks. Well, we don't know that you need QuickBooks yet. Let's see what you're doing and how you're doing it first. Let's analyze what's going on first before we look at what kind of accounting software is out there and what's appropriate for you. You may not need a $10,000 accounting service. You may need an accounting service that costs you $50 a month. Okay, so let's figure out what works best for you. And do you want to do this, or do you want your bookkeeper to keep track of this and put all the transactions in? And all you do is go back, just like with your bank account, you go back and check it. You check to make sure everything is in and it's in the way that it's supposed to be. So yes, there's a lot of research that goes on before you go get a bank that you are comfortable with. And there are a lot of questions that need to be asked. So as I said before, you need to reconcile your account. That's an accounting term, reconciling. And reconciling means nothing more than I have receipts and I have a statement and I'm matching the two. And if I say my receipt says $3.75 and the bank statement says I spent $3.75, that's a match. That's part of the reconciliation. So what I'm looking for is when the bank sends me that statement, I've been checking every day. I've been checking my account every day. So if something pops up that looks untoward, I know to call the bank today. I don't wait until the end of the month to call the bank. I call the bank today. And so let's get this cleared up. I've called the bank and said, I don't know what this is. This doesn't make sense to me. I don't remember this. And they do a little research and they say, oh, it says ABC company because that's what they send to us. But you know that company as XYZ Corporation. I went, oh, okay, I know who that is now. So ask questions, okay? But you and the bank should always be in agreement. So there's an exercise on page 11 for you, and I want you to take a look at that. I want you to actually look at what is being done and how this fits into how you do business. Okay? So there's a lot of spaces there on that exercise talking about banking service needs. What are your needs? And what you want to think about too is you notice you've got two different sets of columns. You've got one for now and you've got one for 6 to 24 months out. I would like for you to choose a time, somewhere in that 6 to 24 months, choose a time. Maybe it's going to be 12 months, maybe it's going to be 18 months, whatever it is. Put that amount of time there and then start doing the same thing. Hey, now that I've been in business for a year and a half, do I have a difference in the type of accounts that I have? Okay. So you're constantly looking at how you are growing in your business and what your business needs are at that particular point in time. When you go to page 16, this is what I was talking about, looking at the bank will give you documentation. Boy, will they give you a lot of documentation. Don't just take the documentation, put it in an envelope, and go home and never look at it. Look at exactly what they're telling you because they're giving you the blueprint of how to do good business with them. And that's what you're looking for. So when you're building those bank relationships, start now. Maybe you have a personal account at a bank and you're thinking, well, I'll use the same bank and I'll just start my business account here. Do you know people at that bank already? Do you know who they are? Do you know how they work? You're going to ask the same questions whether this is a bank that you've never gone to before or a bank that you've been at for 20 years. You want the same information because, again, you have to have that comfort level. So please feel free to go to the different websites that they talk about. Don't let the websites overwhelm you. They have a lot of information there. If you get stuck on something, you have some trusted advisors are SCORE. SCORE has mentors. You can ask them questions and they'll walk you through whatever they can. You have the SBDC, the Small Business Development Center. They have advisors. They will walk you through things and they will help you. What you're looking for is you need to use your support system. And your support system includes your trusted advisors. Please use them. So let's look at some of the things when it comes to options and sources in order to see how we're going to do business with the bank. So we're looking at options, we're looking at sources, we're looking at readiness, and the readiness is our readiness. When we get ready to go to the bank, are we, and you may have heard these terms before, bankable or lendable or fundable. You may have heard those terms. That means when we go to the bank, do we have all our things set up and organized and complete? So when the banker asks us questions, we've got the answers right in front of us. We're going to talk about the 5 C's of credit. You may have heard about those before, but we're going to talk about what they are and looking at how much does it cost you to use somebody else's money. So when we're looking at these options, and there's a lot of options, please don't think that the only thing that you have to do is go to a bank and ask for money. There's a bunch of options out here on how you can help finance your business, but you have to know your business well enough to know your business's needs now and projection into the future, and to know your comfort level with wherever you're going for that money. So maybe what you're doing is using your own savings. Maybe what you're doing is talking to your family and friends, and they're helping you. Maybe you're looking at, I don't want to borrow this money for more than 5 years. So now you're setting a term limit saying I need to have this paid off within 5 years. Okay, what other kinds of credits are out there? Maybe I can use my credit card. Maybe I can use a line of credit. Do your research first. Okay, are there loans out there that are specifically for my type of business, my type of industry? So there's a lot that you can look at, but try to be as well versed in the information as possible and ask as many questions as you need to ask. So if you're a startup, there may be something that's specifically for startups, or you may have been in business for a while. There may be something that's specifically for people who are growing. Okay, so where do you fall within this conversation so that you and the banker are having a conversation that's beneficial to both of you? You can look at term limits. We talked a little bit about when I talked about the $200,000 house at 6% and you pay on it for 30 years, you've paid over $400,000. You have paid over $200,000 in interest only. Well, that's just the way loans are set up. So what you need to know is when you're talking to somebody about using their money, you need to be very clear on what are the parameters that are attached to that. Okay, are you getting a loan? How is the loan being paid back? What is the interest rate on that loan? Are you using collateral for that? Are you using a line of credit? Line of credit to me is kind of like a giant credit card. It works on the same principle that, as we talked about before, if I have a credit card and I use $500 on that credit card, when I pay that $500 back, my limit goes back up to $1,000. With a line of credit, let's say I got $10,000 line of credit from the bank, and if I use $500 of my line of credit, when I pay that $500 back, it goes back up to $10,000 for so it's called revolving. Okay. And the thing about a revolving line of credit is that your interest rate is not fixed. I'm not going to go into my line of credit. It's going to tell me that my interest rate is 5%. It's going to tell me that my interest rate is going to vary based on the market. So, and it varies day by day. So my interest at the end of that period when I have to pay that money back could be all kinds of interest rates coming into one solid number. It's not going to be 3% all the time, 6% all the time, whatever the percentage is, it's going to vary according to the market. If you have trouble understanding how that works, have that conversation with the banker or have that conversation with your trusted advisor. And so a line of credit says that, and this is called revolving because what happens is you take some money out, you put some money back in, goes back up. You take the money out, money goes down. You use the money, you pay the money back, money goes back up. Okay, so it is constantly changing. The amount is constantly changing that you have in your line of credit, and the amount of interest is constantly changing. Okay, your monthly payments are based on your outstanding balance. When you have a credit card, it tells you there is a minimum monthly payment that you need to meet. But what they really want you to pay is the full thing. What you want to pay is the full balance. So if I spent $100 on my credit card and the minimum is $20, I don't want to pay $20 because now that $80 has interest attached to it. And I really don't want to pay the interest. So if I pay the $100 back, I have no interest that I paid, and I paid it back in full. And now the full amount of what the credit card says I can use is back up to that maximum amount. So business credit cards are a little bit different than personal credit cards. And what you want to know is what is that difference? Are you asking me to do something different than what I do with my personal card? And the answer is probably yes, they are. So again, you want to ask questions so that you are completely understanding exactly what you're saying. Do not sign a document that you do not understand. Yes, I've driven some people slightly crazy because I will not sign anything until you have made it clear to me. You speak your language. You speak the language of bankers. I'm not a banker. You need to speak to me in a language that I can understand what it is you want from me. And if you can't do that, then I need to cross you off my list and go to another bank. So make sure that you're feeling, back to that word again, comfortable in what you're doing. And then you also want to look to see, is there something out there that's specifically for me and for my industry? And if the answer is yes, I'm asking the same questions. What is it? How does it work? How do I fit into that? Am I eligible for it? What do I need to do? What is the application process? I'm asking all of these questions just like I would ask anywhere else. And maybe what I'm finding out is this is really the place that I need to go. This is really going to help me because it's very specific and it understands my industry and it understands what my industry is going through. Isn't that great? And this makes more sense to me than just going to get a general loan. So you have options. So you can look at leasing. I have to go, let's say I'm setting up my office and I'm putting in office equipment and I can't afford an $800 printer, but I need everything that $800 printer does. So I don't have $800 to pay for it. So maybe I can talk to the vendor who has a leasing process and I can get a leasing agreement and I can pay on this through a lease that I can afford the monthly payments. I can't afford the $800, $8,000 to start out with. Okay. So I'm looking at financing inventory. There are companies that will look at what is the inventory you have, and they will loan you money against that inventory. Because if you don't pay, they know that that inventory can be sold and they can get their money back. There is a thing called factoring, and factoring is basically this. I have a company. I have sent out invoices to my customers. I've gotten some of those invoices back and paid in full, but I've got some invoices that are hanging out there and they've been hanging out there for a while and I can't seem to get the customer to pay me. So I go to a factoring company and they said, okay, well, I'll give you X amount on the dollar for those invoices that you have hanging out. And then they take those invoices. I've got some money in the bank, not as much as if people had paid me, but I got some money in the bank from the factoring company. And now those invoices belong to the factoring company and they will go after them, kind of like what a collection agency does. Okay. So, you can get money off your credit card. I would highly recommend that you think about that more than once before you say yes to that, because that's going to cost you a lot. Okay. You can, when we look at this, we see that there's a lot of options. What you have to look at is, are any of these options making me feel better, making me feel comfortable, making me feel like when I say yes to taking on this agreement, that I can move my business forward. For some businesses, the answer is yes, and for some businesses, the answer is no. So there are government programs out there. You may have heard that there is a thing called an SBA loan. Well, the truth is there is not. The SBA does not loan money. What the SBA does is it guarantees that you have gone through a process, because you have to go through their lending and their application process. You have done all of that. And then they say to a bank, we have vetted this person and we think this person is a lendable person, okay? That this person will pay you back the money that they're asking. We will, if something happens, we'll guarantee, and I think the amount is 80%. If they default on the loan, we'll pick up the 80%, but you're still on the hook for the rest of it. Okay, so you still have to pay the rest of that loan back. You just don't have to pay all of that loan back if there's something that happens. And we know stuff happens, like we talked about. We just went through COVID. And so we know that stuff happens, disasters happen. There was a fire in California. There was a bunch of businesses that got burned down to ashes. So maybe they're looking for a disaster loan. There are floods. We just went through a huge cold spell and things froze. A pipe can freeze in an office building that might put that office out of business because of what it takes to get that taken care of. And is there a loan that could help them so they can get back into business? So we're looking at a lot of different things. Please understand that there are options. And as you look at options, ask questions and work with a trusted advisor so that you get the best answers that you can. So there are different kinds of resources. We talked a lot about that. And just keep in mind that these resources are there for you. Every resource does not have something that's going to work for you, but maybe one resource does. And that's the one you want to look at. That's the one you want to ask questions about. You want to know what you need to do and how you need to do it. And SBA, of course, has a lot of programs that are available. Local governments have programs that are available. State governments have programs that are available. And so you want to make sure that your business is attached to these local and these state agencies so that if they say, we've got this loan program that has come through, you're going to say, well, I'm attached to them. Let me find out what that application process is and let me see if this could be something that I could use. So when you're looking at your options, you may be looking at where are you? Are you just starting out? Have you been in business for a while? Are you at the point where you're ready to sell your business? So where are you along the continuum? And are you looking at traditional stuff? Or are you looking at non-traditional stuff? Are you looking at the bankers? And are you looking at the credit unions? Are you looking at SBA? Or are you looking at alternative funders? Are you looking at venture capitalists? Are you looking at somebody to infuse your business with money? And what does it cost you in order for them to do that? So this is just information on who are you? And so if you're just starting out, maybe what you need to do is, instead of looking for somebody else's money, what money do you have? Do you have a savings account? Can your family help you with this? Can you do crowdfunding? Okay, can you reach out to find out if there's some loans or some funding availability just for the situation that you're in? Okay. So this is kind of like a little graphic that takes all those words in that we just looked at. So where are you? Are you a startup? Are you at early stage? You've been in business for a while, but you're still getting your feet wet. Have you been in business for quite a while and your business is growing the way that you wanted to? Are you an established business? Hey, I've been here for a while. I've been doing this for years. I know what I'm looking at. So where do you fall within this continuum? And as you look at that, you're looking at, okay, then what kinds of monies are made available to me at this stage of my business, And am I comfortable with what is being offered and how I have to pay it back? Be aware that there are angel investors and venture capitalists out there. Also be aware that they normally are looking at taking a portion of your business. If you've ever seen Shark Tank, you know that yes, I will give you 10% of my business if you give me $100,000. Okay, well, there's some angel investors out there, venture capitalists go, I want 50% of your business. And I want to have a say in how you run your business. And I want to be able to do this and do that and do the other. Are you comfortable with that? And if the answer is no, then the answer to them is no, because you're not feeling comfortable that that's something that you could do and still feel like you have control of your business. Again, back to the questions. Ask as many questions as necessary. So on page 27, you will see that there is a checklist. And so what I want you to be thinking about is, what does this checklist mean and how does it work? Okay, so if I'm looking at what's happening with if I'm looking at what's happening with EcoGrow, what's happening with me? What's happening with my business? And what kind of questions do I need to be asking? What kind of things do I need to be looking at to say, oh my gosh, this makes sense to me, or uh-oh, this doesn't really make sense to me. Okay? And if you look on page 29, you will see some of those things. This is to tickle your brain. It's to say to you, hey, these are things that you need to think about before you have the conversation. You need to be clear on what things you can tolerate and what things you cannot tolerate. And ask the questions, maybe something that you feel that you cannot tolerate. After you learn more about it, you go, oh, now that I know what it means with this institution, that's great. Now, when I get it in writing, I need to read that to make sure that it says what the person just told me. Because when I sign the paper, what the person told me doesn't mean a thing. Only thing that matters is, what did I sign? Okay, so how do you improve your chances of getting a loan? So let's just say you and I both went to a bank and they said yes to you and they didn't say yes to me. My first question is why? What is it? What's lacking in what I brought to the table that made you feel that no was the correct answer? So I want to know why I didn't get a yes. And then I want to know, what do I need to do to get a yes? So simple things like making sure that your credit is as solid as, as solid as it can be. And if you're still working on it, that's great. That shows that you've got that initiative to make those changes. Be very careful to separate all of your personal stuff from your business stuff. And when I say stuff, I mean everything. I mean, I want my personal documentation to be different from my business documentation. If I have a company card that's business, am I using that for personal reasons also? Then I need to show the separation between when I'm using it for businesses and when I'm using it for personal. That needs to be separate, because what happens is the IRS looks at this and they say, oh, you said you have a business and these are the things you do in a business according to us. If you are not doing those things in your business like we say they need to be done, then we're going to take away that cushion of a business and turn all of that into personal. You do not want that to happen because then now you got a mountain of taxes that you got to deal with. So you want to make sure that you keep things very separate. And remember what the CPA said. Your job is to make the CPA look good. That's because you are keeping good records. That's because you are keeping things separate from one another. That's because you are doing your bank reconciliation statements. That's because you are checking your bank account on a daily basis. You're doing all these things so that if there is ever a question, you immediately have an answer because you're on top of your finances. Okay. So let's look at, I'm saying, tell me more about what I need to know. I know credit score is a big issue. I know that a business credit score and a personal credit score do not look the same. So if I have business credit and I have business credit score, I need to understand what company, what bureau is tracking it, and I need to understand what they're tracking and why. Just like from a personal standpoint, I need to know what bureaus are tracking me, and I need to understand why they say one thing versus another. I looked at, there's three basic, for personal, there's three basic bureaus. And I looked at one bureau and I'm in the 700s. I looked at another bureau, I'm in the 600s. What is the difference between the two? What is one seeing or not seeing that the other one is? I need to know that because if I'm talking to someone and I'm saying, I'm talking to you and I'm asking you for your money and you're looking at bureau number one and I'm looking at bureau number two, we're not speaking the same language. I need to understand what all three bureaus are saying about me. From a business standpoint, I need to find out what the business bureaus are. And if I have business credit, I need to understand what that means and how that works. I need to answer those questions. So this keeps popping up, doesn't it? Keep your business and personal transactions separate. Avoid commingling. Commingling is when you mix your business and personal together. So keep commingling as a no-no. Maintain accurate bookkeeping. Bookkeeping means maintain accurate records. Keep a record of all of your transactions, money coming in and money going out. Consult with the tax advisor. You notice it says tax advisor, it does not say CPA. You may not be at the point where you need a CPA, and you're probably at the point where you can't afford a CPA. So what you're looking at when it comes to taxes is who can I talk to who is knowledgeable about taxes, who can guide me through this process. Because a lot of the stuff we do for us, because it helps keep us on track when it comes to our business, but a lot of the stuff we do for the government because the government is watching what we pay in taxes and how we do that. So these are the 5 C's. We talked about this at the very beginning, okay? These are the things that when you sit down and talk to a lender, they're looking at when it comes to how they form their questions to you. Capacity. Are you able to pay back the loan? If you've got $100,000 in assets and you've got $90,000 in liabilities, you've only got a $10,000 cushion, but you're asking me for a $100,000 loan. I'm very uncomfortable with that because I can't see that you have the ability to pay me back. There's not enough money coming through the business that allows you to have that cushion to pay back this extra liability, this extra loan. Collateral. What's the security? If I said, oh, well, I came to you and I'm asking for $100,000, but I got $50,000 sitting in my reserve savings account. And you look at that and you go, oh, that's good collateral because if something goes wrong, that money we can pull out of that collateral account to pay for this loan. Okay. You're looking at my credit history. How do I manage my money? Do you understand that when you're looking at credit history, you're looking at less at money management and more at debt management? You're looking to see, how do I manage my bills? Do I pay them on time? Do I pay them in full? Do I pay more than the minimum? You're thinking about those and you're asking me those kinds of questions, which helps you to evaluate if I am quote unquote fundable. Okay. What are the conditions? You're going to tell me if you're going to loan me money, you're going to tell me exactly what you're going to loan me and how it's going to be paid. Well, you're going to loan me $15,000 and it's over a 7-year period. This is the minimum amount that needs to be paid, et cetera, et cetera, et cetera. So you're going to give me that information. And I love the conversation, but I need to see it in writing, because I'm not signing anything until what you said matches what's on the paper. Does that make sense? And character, what kind of person are you? Are you honest? Do you have integrity? Do people do talk about you? And I'm like, oh, yeah, okay. Now, what are they saying about me? Are they saying good things about me? Are they saying good things about my product or service? Are they saying good things about my business as a whole? Are they saying good things about me as a person? So those are the 5 C's that when you're talking to a lender, they're looking at those things. And even if they don't ask you those in those terms, they're going to cover all of those. So your loan readiness form, which I think is such a cool thing to have. It's on page 36. And what you're looking at is your job is to be ready to take somebody's money. And if you're not ready to take their money, you're not going to get their money. Okay? So how do you get ready? And a lot of this is what we've talked about already. Okay? We've looked at all this stuff, and you go back to page 37 and you see there's going to be stuff on the checklist about your personal stuff. There's going to be stuff on the checklist about your business stuff. Okay? And so all of this information, you need to have all this thought through, figure out what's going on with your business. And I would recommend that you make a copy of this and use this constantly. Maybe I do it for the first 6 months. Well, you know what? When I'm going from going into the 7th month, I need to do this maybe for the next 12 months. Or maybe I need to do this for the next 2 years. But I'm constantly looking at this and saying, as things change, I need to have a plan of action so that I can stay in the right place as these changes happen. So we're looking at financing using savings, understanding the features of what kind of loans are out there. There's more than one class in our virtual classroom on loans. Some of them are specific to government loans. Some of them are loans in general, but there's some financing classes that are there. Please feel free to take a look at those. You may qualify for some government programs. Understand what the government program is, understand how it impacts you, and is this appropriate for you? And so if you want to improve your chances, because I said you got the loan and I didn't, so I'm constantly saying, well, what happened here? What do I need to do so that the next time I talk to a banker, the banker says yes? I'm looking for the banker's yes, because the banker's yes means that I get the money. The banker's no means that I don't. So I'm looking at I'm constantly monitoring my personal credit. If I am a startup, if I've been in business for a while, do I have any business credit? And if so, I need to be monitoring that. I'm looking at the 5 C's. Do I fit into those? And am I the kind of person? Do I have the kind of business? Do I offer the kind of products and services that someone would want to back me? I'm looking at different resources that are out there, whether they are private resources, bank resources, government resources, whatever. And then avoiding scams and frauds. We're going to have a 10-part series coming up soon called cybersecurity, hacking the human. Okay. And your best defense against the frauds and scams are education. That's your best defense. So learn as much as you can how to take care of yourself, how to recognize this stuff when it happens, and how to call when and how to call the pros. So we are looking at government agencies that are out there to help you. Now, this is some of the verbiage that's out here when it comes to scams and frauds. And I said hacking, that's another verbiage that is used, okay? But what you want to do is learn as much as you can. I don't want you to learn this after the fact. I want you to learn this before the fact so it doesn't happen. Let's mitigate this as soon as possible. That's why we look at our bank account every day. That's why we get our receipts so we can match our receipts against what the bank says we did, etc. So we're doing all of those things that allow us to feel comfortable that we're doing the best that we can. Now, it doesn't mean that somebody's not going to, unfortunately, knock on our door, but what we're doing is the best that we can to make sure that that doesn't happen. And if it does, that we know what to do next. So there are resources out there, as we've talked about before. One of the first things that you know, and we've heard this over and over again, don't click on a link from someone that you don't know. And I had this happen to me, and it wasn't just to me, it happened to a lot of us. We have a friend in California, and we all got emails from her about something that she had found, and click on this link to go to this thing. And she's calling us. She's not even emailing us. She's calling us and saying, don't touch that email. Delete it immediately. Someone got into my account, and the minute that you click on that, it turns into some kind of a security breach. Okay. So here's somebody that I know. I'm saying, well, don't click on the link unless you know the person, but sometimes you need to check with the person. If I send someone a link that I haven't told them about, I will text them and tell them I sent this to you in your email. Or I will tell them where they can go find this piece of information they were looking for. Because I want them, back to that word comfortable, I want them to feel comfortable that when they work with me, they don't have to feel anxiety or stress because they don't know if I'm sending them something good or bad. So you guys could unmute yourselves. Do you have any questions or anything that you want to go over? Because we are through.
No, thank you. Everything was great. I
It's a
learned
lot
a
of
lot.
stuff, isn't it? Yeah, it's a
Thank you.
lot of stuff.
Yeah.
And
Yes,
there are
thank you.
pieces of that in the virtual classroom that you can go to, and you can pull up stuff on just loans. You can pull up
Mm,
stuff on just frauds and schemes. You can pull up stuff on just banks. Okay, so there's stuff in there that you can look at that will go a little bit deeper than this does, but use your trusted advisors. Okay, ask questions of people and don't you'll probably be as crazy as I am by the time it's over, but don't let people discourage you when you ask a question. The only stupid question is the one that's not asked and did not get an answer. So always ask questions. Maricel, did you have something you wanted to say?
Does your personal credit affect the loan that you might ask at a bank? Like,
Yes.
to
Yeah,
ask
remember
for?
that you're going to a bank to ask them for money. That's a debt. What your credit score does, it monitors how you handle debt. It doesn't monitor how you handle money. It monitors how you handle debt. And the reason I say it doesn't monitor how you handle money is because you don't have a credit score if you don't use credit. Okay? So if you pay for everything in full, every time you do it, you don't have credit. So
Right.
you've got no credit history and you've got no credit score because you don't have credit, you don't have debt. So this monitors how you handle debt because you're asking for a lender to loan you money, which means that you're going into debt with that lender.
Right, right.
Okay?
Yes. Thank you.
Okay. All right, so just a couple more things. I talked about trusted advisors. You guys have your participant guide, and I would like for you to fill out the evaluation form and then just email it to me, please. If there was something that I didn't cover or something that did not make sense, please let me know in the notes on the evaluation form. This is one of those advisors that I talk about. This is the Department of Business and Industry. This is its website, business.nv.gov. And they did a thing called the roadmap. And this is for businesses. So let's just say you're doing okay and you're thinking, oh gosh, I think I got everything, but I don't know how, I don't know how do you name a business? Here is a spot here that talks about naming your business. And when you click on it, it opens up into a place that gives you a lot of resources. It will not name the business for you, but it gives you the information that you need in order to know how to do that and where you go to get that fictitious business name um, um, in the state. Okay. So that's one resource, and I use that one a lot. There's also, we talk about our virtual video classroom that we have all kinds of classes that are there. And you can go here to extension.unr.edu/BUSDEV, which stands for Business Development. So you can go and look at our classes. We got a lot of stuff there in English and in Spanish. We also, this takes you to our overall page. So you can see what classes are coming up. You see what's in the virtual classroom. You see who we are as a team. You find out more about our resources. You find out about our podcasts. Okay. And you can tell this is old because we're still talking about COVID resources. So that's available to you also. Now, this is our podcast. It's called the Biz Life Podcast. And what is its purpose? Its purpose is to have a conversation with the small business community to find out what people in the small business community are doing for people in the small business community. For example, there are people who come on to talk about their businesses, and somebody may be going through something and they hear what this person says, and oh my gosh, I never thought of doing it that way. And that helps them get through that hump that they're going through. Or we've had senators on, we've had Congress people on, we've had commissioners on. We're going to start looking at talking to the mayors. Okay, we want to hear in the political realm, what are those people doing that we elected to those positions? What are they doing to help our small business community? What's out there that we don't know about that we can hear from them and will help us move forward? That's also in English and in Spanish. If you are looking for a trusted advisor, I would recommend the Small Business Development Center. It is nationwide and in some territories. And the Small Business Development Center has what they call advisors. And what the advisors do is they sit down and walk with you through your business. They help you move from point A to point B. Again, they don't do the work nobody does the work for you. This is your business. But they give you the guidelines that you need. They give you the resources that you need so that you can take that next step forward. So you go to the website, you click on Request Advising, and this is the page that pops up. And what you want to do, if you are not a client, you want to go to New Client Setup. If you are a client, you want to go to Contact Us because you want to find out who is your advisor now. And if you want to look at training that is done through the SBDC, you can go to their training events, and you're going to find a lot of their training events. They have some of our stuff on there. They have some stuff that other areas of the state are doing, so that we're trying to, as a group of resources, have a collaborative place that you can go to, and you can look on one person's calendar and you can see a lot of different organizations and what they're doing in the area. And then there's also SCORE. Okay, so SCORE used to be the senior core of retired executives. But what they're looking at now is not just people who are retired, because let's say that you were the marketing manager at a big company, and so you decided when you retired that you would like to help out small businesses. So you bring your marketing expertise to the table, and you work, when somebody has a marketing issue, they work with you because you understand marketing. Okay, so they're mentors that will walk with you and help you and guide you as you are going through this process of growing your business. In Nevada, be aware that it is mostly a virtual chapter, but they do have people that you can talk to, and they have a lot of classes, and the classes are from around the country. Find what makes sense for you and learn as much as you can, but do not overwhelm yourself. Okay, so get a focus. Don't spend all your time learning and no doing, because learning doesn't bring in customers, doing does. So you need to be working in your business as well as working on your business. So thank you very much. I appreciate your time. I appreciate you coming and joining us for this class. I know that this one was a very long one. But if you have any questions at all, there's my phone number and there's also my email address. Please feel free to contact me. Thank you very much. Bye now.